Okay, recording this video on Wednesday, the 3rd of February 2021. It's just coming up to 9:58 p.m. Chicago time. Do hope you are doing well. Thought I'd do a pretty quick midweek review of the charts and just show you some of the charts I'm looking at. We've got a couple of setups happening on some charts. Want to show you those, but also want to talk about how we're doing on this dollar index trade. So mostly going to be tick bar charts as we kind of roll through these. Dollar index, Japanese yen, Euro, Bitcoin, E-mini, gold, orange juice, sugar, cotton, and soybeans. But just let's review the dollar index chart, because I was talking about this, I think, on the weekend, saying that we were looking for a grab and go trade. Usual setup with the better indicators. On the left-hand side, we have the two indicators to do with volume. We've got below the price bars, we've got better momentum, which is a volume-based momentum indicator. And then on the price bars themselves, we have better pro-am, which uses the average trade size to identify professional and amateur activity. And professionals painted in blue, amateurs are in yellow. So we can see them here with little rainbow patterns as well. Right-hand side, everything to do with price, based on better sine wave, which is calculating the cyclical activity in 3 different time frames. That allows us to print support and resistance lines on the price bars themselves, and then breaks of those support and resistance lines gives us uptrends and downtrends. When the volume indicators and the price indicators are both in the same direction, the background is printed in gray for downtrends, and when they're both signaling uptrends, the background is printed in red. So there we go. We've had this little move here where a whole bunch of blue professional bars kind of come in, and we busted through this resistance line, and the trailing stop, professional trailing stop here indicator on better pro-am has flicked the other way, and we've got blue professional bars kind of buying through this, and I call that a grab and go trade. So I think that's going to be pretty significant for the dollar index. So I like that at the moment, long dollar index, and planning to hold it for a little bit because I think this has got some legs. But let's just go down to the tip bar charts and just show you what I'm seeing there. This is that kind of low being made down here. What are we talking about in terms of dates? So January the 6th or something like that. We are talking about here on the actually almost the low for the market back here. We had almost exactly the same pattern, kind of a grab and go, if you like, as we kind of bust through this trailing stop on better pro-am, and it flicks into an uptrend, and that's exactly what happened here. A whole bunch of blue professional bars came in here at 89.6. Bang, they bust us into an uptrend here. That's a grab and go trade. And then subsequently, where I got on this is what I call a stair step. So we don't have any blue professional bars taking profits at these little rises here, but as soon as we get into a little bit of weakness, the professionals step in, bang, and buy it up. Again, market goes away. There's no blue professional bars. There's no taking of profits or anything like that going on. We have a little bit of weakness, professionals step in, bang, and that's what I got interested in. So that's where I'm in on this trade. That little exhaustion pattern you can see is getting the move going. You know, we're just at the bottom of this whole sequence. We're busting out of this kind of channel, kind of basing activity here. That's getting the move going. So this thing isn't going to be over until we see a similar pattern when we get to highs. So that's doing quite nicely at the moment. But just to caution you, the two biggest components of the dollar index are the euro and the Japanese yen. So if we look at what the euro is, the Japanese yen, first of all, is doing, you know, this has been in decline. So the dollar index is going up, so we'd expect the euro and the Japanese yen to be going down. We've had all this weakness in the Japanese yen since that 6th of January, kind of high up there. But last couple of days we've got rainbow patterns down here and amateur activity at the lows, and we've busted past supports on better sine wave here. We're in a downtrend. All these white bars shows that's weakness and downtrends, and we busted through supports. At some point we're going to have like a little pullback to end of trend, and because this is all being led by the amateurs at this point, that means it's kind of weakening on the downside. Now, it's not all over on the downside, but we could have a little bit of a pushback from there because the amateurs have taken it too far. They're getting involved here. Wouldn't be surprised if the professionals kind of push it back up, kind of get them shaken out of their positions there on the Rambo patterns, have some amateur bars on the way up over here. We might see a blue professional bar or two kind of step in over the next day or two and just hold it and push it back up. So could have a little bit of strength in the Japanese yen because it's being led by the amateurs. Similarly, on the euro chart here, again, what are we talking about? That's the 12th. There's the 6th of January here. Peak in the euro, and we've been declining ever since. Now, last couple of days coming into this low, here's similar thing. Rambo patterns at the bottom here, and a couple of blue professional bars just stepped in. And we've kind of come past a support on the highest time frame. We put in some pullback to end of trends. Yep, we've overshot. We're still weak with yellow, with the white bars showing weakness and downtrends. But again, being led by the amateurs, blue professional bars have stepped in. I wouldn't be surprised if we have a little bit of pushback on the euro and the Japanese yen, and so a little bit of weakness in the dollar index. So just mentally, I'm prepared for that. I like this for a longer term trade, so I'm not going to exit or take profits or anything like that. But if we do settle back down from the dollar index, I will not be surprised as a result of this move kind of being overextended for the time being and led by the amateurs with Rambo patterns. So that's a comment on dollar index. Bitcoin had an awesome couple of days here, and last video I did on this about a week ago and talked about all these blue professional bars kind of coming in. Bitcoin on the retrace here from this 42,000, it had all been amateur up bars up into those highs at 42. So we knew that it was kind of being driven by the amateurs, so it was likely to come off a little bit. So when we had this weakness, wasn't surprised, and I said get back interested in Bitcoin because it had a whole bunch of blue professional bars there. It's almost like a grab and go, same thing. We immediately kind of go through the trailing stop here. We flick into an uptrend on both price and volume here with the background painted in red. And we went for a really strong move to 38. And then we settled back down. Again, no blue professional bars taking profits here, no amateur bars up here, but we fell off pretty quickly. And then these are the amateurs on this retrace here, getting a little bit scared, shook out of trades back there. And so it's not unusual for us to see kind of reversal off that amateur weakness. And this last move being pushed up by Rambo patterns at that point. So we've certainly gone through the highs of that, which is okay, but it just means it's a little bit weak in terms of what it's doing. We've got a cyclical resistance due on the next highest time frame, on the highest time frame on this 10,000 tip bar chart of Bitcoin. It's a little bit of a double top kind of going on here. So I don't know, we could settle back a little bit, but no reason to get out because we've not seen any blue professional bars at the highs, haven't seen exhaustion patterns or anything like that, but we could have a little bit of weakness until the professionals kind of step in again, potentially kind of drive us up again and have a look at 42,000 on Bitcoin. E-mini. Well, this was Sunday's activity where we had that just spike down here, and we've had a strong 3 days from that move, and we've kind of run out of steam in terms of price. We put in pullback to end of trend on the lowest time frame, on the intermediate time frame. We've overshot resistance on the highest time frame here. So cyclically, we're a little bit overdone on this move up. No exhaustion patterns, quite a lot of selling at the end of today, which is interesting. There was one or two blue professional, that was yesterday, we had blue professional bars kind of come in here. I don't know, cyclically we're due for a little bit of weakness, but maybe let's see if that kind of develops into anything. But we've had a strong 3 days, kind of uptrends. Any little kind of dips in this move on the way up have been kind of good opportunities, but wouldn't be surprised if tomorrow we have a little bit of weakness because we just maxed out in terms of the cycles here. And then I want to talk about under the lip trades because we've got a couple of setups, one on the long side, one on the short side, which are happening kind of at the moment. And I want to show you these just as an explanation of what I call an under the lip trade. Sometimes I get some comments and questions about this, my terminology. I just make these things up as I go along. And for me, this just reminds me of the market's kind of maxed out here. The trend changes. The Pro-Am trailing stop kind of flicks the other way. We have some initial weakness, and then we come back up, and we can't get through there. We can't flick back into a confirmed uptrend where we break above this, and we kind of bounce off that and come the way down. For me, I view this like a surfer views kind of getting into a barrel, and it's like the lip of the wave here. You're just kind of coming under that lip, and then riding it all the way down, kind of under the lip. So that's what I mean by the terminology. But what's important to look at is professional and amateur activity. We can look at the cycles as well. You can see that cyclically, you've got resistance on the highest time frame, on the intermediate time frame. We have a little pullback to end of trend and another resistance. It's triple resistance happening here. But look at the blue professional bars and the amateurs and the patterns that they're making. We've got a whole bunch of blue professional bars here. This is gold, 4,000 tip bar chart, taking profits at this 1875 level, and they're pretty anxious to get out, and they use all of that kind of range and activity to get out. They're in a hurry to get out. The market kind of weakens, but on the way back up on the test, it's being led by the amateurs. The amateurs are saying, "Ooh, I can pick this up at 1850," and it goes for a little bit of a push back up to test those highs, but it gets nowhere, and then kind of gradually rolls around, and then we see amateur bars on the way down. Sometimes you don't see these amateur bars, and the test up is just amateur up bars into that lip, and then we kind of roll over. But here we've seen them go the other way, and at that point there, they're kind of getting out, and they're kind of frustrated because that kind of retracement didn't work out, and it didn't kind of break to new highs. So that's an under the lip trade, and you see the blue professional bars, and then driven by the amateurs, and then the amateurs saying, "Whoops, I've got it wrong. It's going the other way." Going to show you orange juice, which has had a really pretty pattern, exactly the same thing. So orange juice had a really nice rally up to 132. Blue professional bars here, all taking profits, driving the move, and then at these highs you can see all of that volatility there getting out. And then the market falls off really quite steeply, but on the way back up, on the retrace back up, under this lip here, driven by the amateurs, amateur up bars into that move, and then they roll around, and on the other side here they're kind of saying, "Whoops, I got that wrong," kind of rolling around and going the other way. So as an entry here, it's really again, triple resistance, highest time frame, intermediate time frame, lowest time frame, all come in there. They can't, get this back up to those highs. The market just kind of rolls around, and it's been a really strong move on the way down. That was orange juice. Didn't get involved in that, but that's been really good. Now, a couple of patterns happening at the moment for a similar type trade. Sugar. Sugar's had a nice little move up to 1675. And here we go, blue professional bars at these highs here, taking profits. We have some weakness, and then we've driven the price back up under the lip. And you can see all these amateur bars kind of trying to buy this market and, see if it can kind of get through 1675 and break to new highs. And no, we've started to roll around here. And then similarly on the cyclical patterns, it's triple resistance. Resistance on the highest time frame, intermediate and lowest time frame here. Not broken into a downtrend as yet, but below 16, kind of even whatever that support is, which is 1598. But break below of that would give us white bars and downtrends. So that would look more like here where we got confirmed downtrend underneath that, or the gold where it fell into a downtrend. So sugar at that point, a break below 16, bang, would take it into that downtrend, and we could look for a similar kind of short pattern into there. Cotton at the moment, again, blue professional bars, a couple of them, 2 or 3 of them, up here at the highs, having trouble getting through 83s. We've fallen off, and we've had the beginning of this move kind of up. Now, I don't think this bar is closed yet, so we don't know just looking at that, no, I don't think that's closed yet, but whether that's going to be an amateur bar or not sure. But again, on this move back under the lip, being led by the amateurs, not very good. So let's see if we get a similar pattern. You don't want to be shorting it on the way up. For me, I'd kind of like to get into the move where it has the strongest kind of momentum and speed. And so I'm not interested in getting the max of the market here. I'm interested in getting the direction right. So let's see what this does over the next few days. Hopefully it'll kind of keep on and then roll back down to break below those amateur bars and then into a downtrend on cotton. So I call that under the lip. And there's a similar type pattern kind of for going long, which was I'd call the bouncing ball here. And potentially on soybeans, that's what we've got kind of lining up. So soybeans has been in a really strong uptrend for months and months and months, massive kind of up move. But after we had some profit taking, exhaustion buy up here at 1440, the market's kind of sold off. But down here at 1300, blue professional bars have started to come in. And we've broken above the trailing stop, and so we got a trailing stop support down here in red. And then here we have amateur down bars and then amateur up bars kind of as a little bit of a turn here. So the amateurs were kind of getting short here. No, we kind of reverse and go the other way, and they're kind of being tricked out of their positions at that point. So it's exactly the same pattern, but just in reverse. So instead of blue professional bars and then amateur bars going up under the lip and rolling over, it's the reverse. We've got blue professional bars into the low and then coming back down, testing that low, being driven by the amateurs, and the amateurs kind of trading the other way, being either taken out of their positions or deciding they've got it wrong at that point. And then we've got a triple support going on here. So we've got support in the highest time frame, on the intermediate time frame, that line there just underneath, and that support there going on the lowest time frame. So triple support kind of coming in there, bang. So let's see how this plays out over the next couple of days. We've got a potential short kind of coming up with sugar. If we break through this 16, that'll be kind of confirmed entry. With soybeans, getting above 1376 kind of conclusively, nicely. Will give us another trade to the upside. This has got a little bit of time to run. We've got support to resistance to run on the highest time frame. And then cotton in the next few days, that could be interesting for a short trade there. So there we go. Bit of a rambling midweek review of some charts, show you what we're doing on a couple of different markets and some potential setups that we can see over the next couple of days.